All right, good morning, everybody. Good morning. Let's go ahead and get started with the broad market analysis. I'll be covering August 13th through the 17th, and to get us started here, we'll be looking at the earnings calendar that I pulled off of X, formerly known as Twitter. And as you can see, I have went ahead and circled the names that, speak to me, things that I'm interested in. And as you can see, Home Depot is reporting this Tuesday morning. And then on Wednesday, we have Target on the morning, Wednesday afternoon, Cisco, Thursday, Walmart in the morning, and then in the afternoon, Applied Materials. And then I circled Ross. Why? Because I'm telling you guys right now, the ladies, I had a pool party last night, right? What I mean is just to get together with friends from actually my high school days in Japan. So people I had not seen in over 30 years, I got to hang out with last night. And all the women, including my wife and some of our neighbors, they all had something in common. We were talking about inflation and all those good things, and they all seemed to agree that they like to go to Ross or TJ Maxx and all of these places where you can get clothes a lot cheaper than what people are asking for, and so I'm always got my eyes on them. And then of course John Deere, John Deere. I mean, what a great stock if you got into this years ago. Definitely want to watch this. Now these are names that you need to be aware of. Like for example, if you were in Target coming into tomorrow morning and you want to hold it until Wednesday, maybe, this will have, sorry, if you have Walmart or Target, these could affect each other. Okay, Home Depot, like if you were holding on to Lowe's, perhaps if Home Depot dropped 10%, Lowe's could be a sympathy play and we could see it go down. But there are those cases where, if Home Depot does bad, maybe Lowe's goes up. I just want you to be aware that it's on here. I don't want you to get too biased or anything like that. These will create catalysts in the market. They'll create, big moves in the market as well under those specific names. So they should be fun to trade from an intraday basis. All right. So just be aware of what's on here. That's all I'm saying. Let's go ahead and move on. So our next one is going to be Market Watch. This is more free information that I get right here from the internet. And what it does is give me information on economy news. And I want to know about it only because it can cause wide fluctuations in the market. Now, the way that it works for supply and demand traders is that we come in, you know, first of all, every single morning I cover the futures. All right. Whether you're a futures trader or not, you get to trade off of those blueprints because when we use ES futures, you can use SPY and SPX. And when we use the NASDAQ futures, you can use QQQ if you like. All right. So it's really good to know. But these things here cause nice volatility in the market. And that's what we're looking for. And if you remember, on a blank canvas, we are going to find a demand zone and then we're going to find a supply zone. All right. And then we know in the background that we have a catalyst coming out. And what you do is you basically train. We teach you how to identify these levels. And then when price gets here to one of these levels, we look to execute. All right. And that's what it's all about. It's like getting prepared for the game day. All right. So we want to be aware of these levels so we can take advantage of them. Right. And then as price pushes up into supply, we pull our stops up and so forth, or we can go short into these supply zones. Now, these are the kind of things that could cause volatility and for price to move very quickly to supply and demand. All right. US retail on Tuesday. Now, the reason why there's no Monday, it says none scheduled. Okay. Tuesday, we have US retail sales, import price index. And I have to pause really quick. All right. This is important. I just want you to know that, like, for me, all right, I don't care to spend time on what we think is going to happen during these, right? So, like, for example, US retail sales were blah, blah, blah last month, and this month we are expecting so forth. Like, that doesn't do anything for me. Again, supply and demand can be identified before those numbers come out, and then we just wait for price to be pushed into those levels and then we execute. It's very important for you to understand this, all right? The majority of traders, they spend all this time trying to dissect information, and at the end of the day, price is king. I just want you to focus on the fact that we know that it's coming up, and second, how to find that supply and demand. On Wednesday, we have housing starts, building permits, industrial production, capacity utilization. And down here at 2 o'clock p.m., and these are Eastern times, folks, on the 16th, we have FOMC minutes of July meeting. Thursday, initial jobless claims, Philadelphia Fed manufacturing survey, and at 10 o'clock, U.S. leading economic indicators. Friday, August 18th, just like Monday, nothing is scheduled. It's actually a pretty slow week, and because the overall trend has been down, and we'll get to that here in a second, you could see continuation to the downside and getting us ready for the playing field. Okay, the playing field for me would have to be around Thursday. All right. Now we'll look at some charts. We'll look at price action. We'll look to see what are some tools that we can use to make sure that we stay on the right side this week. Okay. Let's go ahead and move on. This is your SPY and QQQ neutral strategy from the week prior. Now, I've been keeping track of these for years. That means every week I name them something different and we keep track of them. They do very, very well. And then every once in a while, all right, we'll come in and not much will happen. And matter of fact, I feel like that's what happened this past week. If you notice, we started last week, and I tell you guys, people use my neutral strategy in different ways. Some people sell credit spreads, iron condors around the levels. Because if you think about it, when price comes down into the levels, we're looking for it to bounce, right? If price moves up into the upper levels, we expect it to reject. Every once in a while, we can blow through these levels, and that's awesome if you're a bull or a bear, depending on what direction we're going. But the higher probability is that we stay within the range and that the levels work very well. Now, this past week, it was pretty boring, and you can see here, SPY came up. I think in the beginning of the week, I took this one. I closed right at T1. It was only $1, nothing to brag about, but the process worked, okay? But one thing I want you guys to notice is that we came into the week saying, like, if price could not get over and hold over the 4-hour cloud, the trendy cloud, right? This red cloud that's above us, that we would continue to see sideways to down. And that's going to be the same sentiment going into this week. And again, I'll show you here in a few minutes, all right? But just please understand, no matter what is happening here, even if I say the sentiment is sideways to down, we can still play and take trades to the upside. Now, if you're not in the room, then you wouldn't understand basically where exactly I'm doing that or how that's done, but you're more than welcome to come and join us for a trial. But basically what I'm doing is, and the things that I tell our members here, our team, our family, is listen, just trade the levels. When price comes down to one of my lower levels, a line on the chart, a manual line that I've drawn, so forth, we look to take that long or a short intraday trade off of those levels. And when price comes into the upper levels, you can trim those or you can go short, okay, to each their own. But the levels work really, really well. Over here on the QQQ, same thing, it started to bid above the neutral. It didn't quite get to target one. It was a weak week, right? It stayed under the 4-hour. It was sideways to down. It was pretty choppy, in my opinion. Now, I do this very rarely, okay? But I decided to do it this week, so listen up. We are keeping the same numbers that we had for last week. Every once in a while, I'll do this, all right? And seriously, over the years, I could probably count on both hands how many times I've done this. I just feel that since we didn't get much of a move, let's go ahead and talk about this neutral strategy and keep the same numbers we had last week. Now, when I do this, I'm switching over to the daily, and you guys can see that these are the daily time frames. That doesn't really matter, but it might be able to kind of give you a clearer picture on why these levels might work so well for us going into this week as well. Well, if you notice here, when I zoom in on the daily, we came to our last support level, if you will, on the trendy cloud. Notice we bounce from there. And when we're in the cloud, that's kind of how we look at things, right? So the cloud is here and the cloud is there. When it comes down to the lower level, you're looking for support. You get that little relief bounce. When you push up into this level, you're looking for it to be a rejection area, okay? Now, when I look at the levels that I provided for the previous week, you could see this is still intact. This is a gap fill over here around 442. And the idea here is if price cannot get above the cloud, I do believe that we could continue down here to at least fill that gap. And if that gap doesn't fill, then guess what? We're coming into this little bit of area of demand, but also there's a trendy level right here, okay? These trendy levels find demand and supply. Demand is to the downside, supply is to the upside. And the idea is that these levels will work. Please understand that they can be flush for a few minutes, a few hours, but the idea, because this is a higher time frame demand zone, that we will reclaim it and then start to move back up. Going into this week, I would expect 439 by 435 to hold this week. I do believe that we've been moving down quite a bit and we could be looking at a relief rally really soon. Okay. Over here on QQQ, again, I don't have to, I'll say it if you didn't watch last week's, but this is supply. This is supply. And you can see price came up. We hit that supply. We came back down. And here we go. Notice one thing here on your Qs. They have gone from green to white to red. So the momentum is really not in the favor of bulls. But again, I'm going to stop there. The majority of traders, when prices are moving down, tend to say, I want to sit on my hands until blah, blah, blah. And it's okay. I'm not saying you shouldn't. But what I do and what I train for and what I teach you to do is to look for demand. We actually want to buy prices lower, okay? It's no different than when we go out into the market and say we want to buy a home or we want to buy our favorite item that costs a lot of money. At some point, it gets too expensive. That would be this area here. And then prices pull back to where they remember that customers like to buy. That is the demand zone. Where is our demand to sell this product? In these charts, we can actually identify those higher probability levels of traders coming in and buying. All right. However, just like you and just like thousands of people out there, we're using technicals, right? And it's us against the algorithms, as they say, right? What is your edge? My edge happens to be supply and demand because the majority of traders are actually using what most traders use. And when you use the same thing over and over that everyone else is using, you don't really have an edge in the market. Okay. So once again, very important for you to understand that everybody's looking at these technicals and they're saying to themselves, for example, hey, it's going to break below this EMA. All right. These are the normal things you're going to hear during this time. The RSI this, right? Or we have a crossover, we have a death cross, or, you might hear some crazy stuff. What I want you to do is just when you look at these charts, I want you to say to yourself, very plain and simple, this is support until proven otherwise. This is support until proven otherwise. Each one of these levels, when you have good levels, they serve as an opportunity in the market. All right. You don't know if this level is going to work. All we can say is like, hey, we've seen this play out over and over. And in most cases, these levels are better than they're not. So we take an opportunity, we understand what our risk is, and we execute the trades. Another thing that I want to show you going forward on this neutral strategy is down here, your TTM squeeze, right? TTM squeeze, you can see we have red histogram. So from a daily perspective, this isn't really like giving me any warm fuzzies to say, hey, I think it's time to buy yet. Again, I want to be careful when I say that. That doesn't mean that I won't go to the upside, right? You could still make an intraday trade and make 100% on SPY, right? And at the end of the day, the candle looks like this. And you think to yourself, I can't believe I just made money to the upside. But it is possible. It is possible that tomorrow, we could gap down into this level, but then the candle itself move all the way back up towards the top of the cloud, but end the day down here. So it is possible that you could still make money to the upside when things are trending down. All right. Overall, though, red histogram, right? It's saying, hey, be cautious. We're kind of on our last support leg, if you will, from a daily perspective. It's just kind of sitting there on that cloud. And over here, the Qs have been leading to the upside and to the downside. Now they have broken down below their cloud and now they've hit T1. It did bounce. So this is a great representation of how this level of support and this level here was resistance. This level here was resistance. And you could see that the EMA itself was support. Go ahead at this point and you can pause if you didn't get the levels from last week. Put these on your chart, see how they play out. All right, so the bigger picture, this is the SPY, all right, from a quarterly perspective. And I've been keeping the notes every week that I come in here and do that so that you guys can read them, but not only just read them, but really read them and understand what price has done. And if you have any questions, please reach out. It's also a great opportunity to see that the stuff that I've been teaching and that I've been teaching for many, many years, I kind of know what I'm doing, all right? And I feel very confident in that, or I wouldn't put this out for people to read. I wouldn't trade live in front of people. I really know how to read the market. Listen closely. These are the quarterly candles. And the cool thing about TradingView is it lets you know, this says 1 month, 17 days until the quarterly candle closes. Now, because we have this topping wick here, and I have a video that you guys can watch on YouTube. It's a really short video. The topping wick is a big warning sign, okay? Whether it's on a 10-minute, whether it's on a quarterly, whether it's on a weekly. Basically, what it's telling us is that the bears are in control here. Now, why did we get a topping wick? Because we came into the inside and down formation. I also teach you that. This is not any surprise for any of you. It shouldn't be, especially if you are learning this supply and demand, okay? So topping wick into supply zone, and now we're just kind of hanging out here. Let me go ahead and read my notes to you. Today's update, price close under the weekly line in the sand that I had written here for the 6th update. The quarter candle definitely looks like it wants to go inside. When I say go inside, I'm looking at the previous quarter's body, not the wicks. And if price goes into the body, we are then inside. See, inside candles are very, very common in the market, and they really do paint a picture for us for a high probability of a big turnaround, okay? Turnaround to the upside or downside, so a big pivot, if you will. All right? But we still have 1 month and 17 days. 439 is this week's support. All right, just want everybody to know that 439. Current price when we closed on Friday was 445.65, and after market it pretty much stayed there. Okay, let's go over here to the Qs. Now, as I said, the Qs were leading. What were some of the things that could have led you to understand how to read the market from the teachings that I give you? Well, you would have already had the trendy edge here, and if you've been following me for many weeks or many months or many years, you already know that this was supposed to be a supply zone and that we were supposed to reject here until proven otherwise. You will notice that we have a very defined topping wick, all right? And so the bears were in control at the supply zone. You will notice that there is also an inside and down formation here. Therefore, you can identify that supply zone. The trendy edge was there to let you know, just in case you didn't notice that there was an inside and down, that it was time to pump the brakes. Pumping the brakes, let's talk about it because I do a lot of pumping the brakes. Meaning, if I'm trading, I would tend to go to this whole ideology of what I trade is what I'm willing to lose. It's one of my favorite things because at the end of the day, I'm Zen-like. And when I take a trade, I understand how much I'm willing to lose, and at the end of the day, I'm okay with that. All right. Everybody has their own number and their own Zen state, but I could teach you how to get there. Okay. Now notice that we are inside, but the SPY is not. That's important to understand. It's no different than the SPY. It also has 1 month and 17 days left. Now it is inside, it is a topping wick, and therefore, bulls, in order for things to start looking better for you, you'd have to push back over this body, which was the last quarter. My notes for this week, the quarter candle has gone inside in a nice topping wick. See my video on YouTube. Most of you have seen that, but if you haven't, just check it out. 362 by 360 is this week's support. Price did stop at a possible support on Friday. Bulls will need plus 374 to show strength or defend 360. Okay? So again, what do I mean by that? That means there's a level that's up above, okay? And you got to get above that, not this one, but there's a level up above that you got to get above. And for some reason, if we come to the lower level, you need to defend that. That's what we're looking to do going into this week, okay? All right, let's move over here. This is really, really important. This is going to be the dollar. And if you don't know anything about the dollar, here's a great time for you to start picking up on it. It's been going up for 4 weeks, guys, from the inside and up formation that I actually found months ago. And once again, it's not like we didn't expect this to happen, but bulls were probably hoping that we could continue to move to the downside here. But just like a good old inside and up, the market found buyers here in demand, and then we pushed up. And you'll notice that the market starts to get a little bit harder when the dollar starts to get stronger. The question is, when you're thinking about it, well, when would the dollar actually slow down and start to pull back or a possible rejection? When I look at this, we find an inside and down formation. It's right there, folks. And we are headed towards that way. However, when you zoom in, I want you to understand we've already tested this level. What does that mean? That means, for anybody that doesn't quite understand supply and demand, I'm going to try to make this a little bit easier for you, is if you wanted to, let's just call that a resistance line. The more that we test resistance, the more that it breaks down. And if for some reason the bulls on the dollar can push through this, I'd be very cautious. That means we could continue to move to the downside in the overall market. Now, on a plus side, if you're a bull, I feel like I talk mainly to bulls, right? That's just how it is in the market. The majority of people are bulls, and I understand we have a nice population of bears, but most people want to see the market go back up, right, when it's moving down. Like, for example, I heard over this week, oh my gosh, man, tired of this market. Can it go up? And I'm thinking to myself, like, man, we do sound greedy. The market went up for like a long time, and that was a really beautiful move. And now it's just part of the ebb and flow of the market. So what happens if we push through here? Again, the market, I would expect it to pull back, but there is one last hope, and that is right there. See that? These are top and wicks, which say that, the bears are in control in this area and that the dollar basically has resisted here every time that it's come up here. And sometimes we think to ourselves like, well, not this time. But sometimes you can be surprised and be like, man, that line is really strong. So if for some reason the dollar pushes up here, say Monday, tomorrow, and we hit this area, it is possible that late Monday to Tuesday that we could see a rejection on the dollar and that the market starts to get a little bit more strength for that relief rally that I'm talking about. Again, disclaimer, price is king. Let's just watch price. Over here you have the TNX. Now, notice up here in the upper right, I say possible capitulation event. Now, I made this chart a long time ago when things weren't looking so great during, the beginning of the year and so forth, and I wanted this level on there. We never got there, all right? And the market started to bid. It looked great. Bulls came back in to save the day. But here's the 10-year treasury again, looking strong as ever. And really what I want at the end of the day is for it to just calm down, cool its jets. All right. Now, inside and up, inside and down, supply and demand. If I were to look at this chart, what I would notice is that notice how it came into the cloud and it just started to bid, right? Just like any other stock that we would watch. But this is the treasury. And it's coming into, and it's already tested, just like the dollar, a supply zone. Notice it came here and the TNX rejected. Notice here it came in, TNX rejected. Now it's chewing away. So going back to, let's just call that a resistance line. Now it's made that resistance line its support. Kind of scary, in my opinion. And if it continues to push really strong and for some reason peeks its head above here, we should start hearing some crazy stuff in the market. So be prepared. If I were you, I'd take an alert while we're sitting here talking and I would put it above this level right in here. So around 4.3, 4.35. If that thing dings, just be careful. Come back and reassess the market, what you're in, and so forth. Okay? What do we want? We just want it to cool down. All right? I want it to kind of cool down, go sideways, maybe pull back just a tad. Over here, this is your skew. All right? If you don't know anything about the skew, just go to Google and read about it. All right? Basically, it's your hedge funds, though. And it's really awesome tool. A lot of people, they say it doesn't work. That's because they're probably not doing it right. I've been teaching you for a very long time that once price got here, it was a matter of time before the market will pull back. The biggest thing here for everybody to understand is that timing is the variable. And you need to write that down. Timing is the variable. Okay? Write it down. Because the problem is most people, they just don't have enough patience. And we get to these levels and they're like, hey man, skew's broken. That's not true. If you go back and you look at the entire skew since the inception, almost every single time that the skew has reached these levels, the market has pulled back. Guaranteed. However, timing is the variable. What we know is that at some point the SPY is about to dump, the Qs are about to dump, etc. But it doesn't happen overnight. Every once in a while you might find it. It works perfect for you, but most of the time, look how long it took. This is a weekly chart. It should be. Yep, it's 1 week. Notice that we got here 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. That's a long time. And that's about how long our rally lasted, right? And now it's starting to pull back. So I'm actually excited that it pulled back. All right. But understand, see the green levels down here? If the market wanted to, the dollar goes bid, the TNX keeps going up, people start freaking out. I want you to continue watching this because it could continue to come down here. And what happens is that if you were to put a SPY chart or a Q chart or anything behind this, you will notice that in these levels, the market will go bid. But it is at this point that the majority of participants in the market will be on the put side and they will be scared for their lives. I promise you that. There will be episodes on news and TV channels that the market is going to never go back up. That's what the market does. It creates fear to drive price down into demand, and it creates euphoria to drive price into supply to catch retail traders off guard, including myself sometimes, even though I understand all this. It happens. We're human. It's difficult. I want you to understand that trading is not easy. So, the things that I'm showing you are not high in sight. Matter of fact, I teach you this every single weekend, what to look for. This is where you're going to get an edge in the market. And then from there, you're going to have to figure out how can you do this? How can you get your mind strong to be able to execute during these times? The fear and greed has only ticked back just a couple points. They're saying that we are still greedy. All right. I'm actually kind of shocked by this, but listen, this just tells me that if the market wants to continue to pull back, it could. This could go here, right? Or it could go over here. I don't know. But it's still saying we're greedy. This is your ES futures. So for my future traders, you guys know, like to trade futures as well. I actually did better in futures last week than I did in options and equity. And so this is always like a backup. If you don't know anything about futures, please come hang out. I feel like I had the most mechanical process out there. Feel very strong about that. We have a lot of great future traders in the room, and I'm very, very proud of that. Now, the ES Futures Weekly, there's no change here, but I want to talk about it. We did come back down into support. And if you notice here, we hit the 9 EMA. Okay, we bounce from there. We have two inside and up formations. To be very, very clear, this demand zone, if you will, is very wide. All right, I just broke it down and made it a little bit skinnier. It could break through this, and if it does, it could come all the way back to 43.41. But right now, we are getting a little bit of a relief rally. When I think, hey man, have we pulled back too much? You know, does it feel like, it's just doom and gloom? Not really. I mean, it's only been 2 weeks. All right, it's been 2 weeks. That's it. All right. But these are your levels. Nothing's changed. I don't think you would need to mark these down unless you're watching this for the first time. Now, over here on the daily, again, I left, we have a buy trigger here, and I apologize. I left these two white lines. You don't need those. Your resistance is up here at 45.19. Your short trigger is 45.56. Buy trigger, pretty close to it. We didn't quite tap it yet, but you can see we are going bid, and I'll show you why here in a second. 4449, and then buy trigger at 4406. Basically, I'm at the backside of this demand zone, and I'm at the top of that demand zone. All right. Moving on over, this is your 4 hour. This is the reason why we're getting that relief bounce. We had the demand zone that I showed you guys last several weeks. And then we had the resistance here. You can see that worked really well. And again, big time to go over that once again until we could start to build value above the 4H cloud. I believe we go sideways to down. Now, another way to do this, I'm going to teach you a little lesson here, because you could, if you're sitting here for a 4 hour, this thing could rally 80 points, right? And you're finally like, hey man, it's above the cloud, I'm going long, and then it drops another 40. In order to catch this a little bit faster, what you can do is use the increments smaller. You could say to yourself, you got that trendy cloud on your chart. What you could do is say, okay, first it needs to get over the 30. I start to feel bullish. As long as it stays above the 30, I'm staying long. Boom, it got over the 1 hour, I'm staying long. It gets over the 90 minute, I'm staying long, and so forth. And before you know it, and it happens every single time, it's just like this. It starts to get above, things start to look really good. That's the easier way to catch it before, instead of just sitting here waiting for the 4 hour. All right. But that's how you can do that. Moving on over to the NASDAQ, same thing, pull back into support. It's only 2 weeks down. It came back from the trendy edge. No changes here except for I put the 50 and 618 here, and I started from the rally itself, which might be from here or here, and then I came up to the pivot high. I anchored those Fibonacci's, and basically this is your golden fib. We need to stay above 14,286. You could find buyers at 14,624. I just want to give you a couple more levels to the downside in case we continue down, and then we have demand all the way down here at 13,527. All right, so here's your daily. I kept the trigger long right here because it's working so far. Your resistance is 15,182. Your short trigger is 15,448. And your new trigger long to the downside is 14,688. Again, I teach you how to do that. We use the histogram here, but we use a smaller time frame. This was the 4 hour. This was the 150-minute zone that worked perfectly, just like the ES over there. I did create a different looking demand zone here. We came into that. So again, relief rally, but don't forget it's a 4 hour. So I would expect price to go sideways to down until we can build above there. But don't forget, you can use the 30, the 1 hour, the 2 hour, and so forth to kind of get in on that trend before waiting for the 4 hour. And before I close this out, guys, my sentiment, no matter what I say to you, it's always the same thing for me. Trade the levels. stop watching news, stop listening to, multiple people give you their input. If you really want to trade and learn a process, you have to give and devote your time to it at least 30 days. And every time you take a single trade, I want you to do the same thing over and over and over. You can't use a process and change your mind and change things around without giving it a sample size to understand if it's going to work or not. All right, very important. So during times I feel like the market gets hard, traders are always searching for the next best thing. You need to understand that the market is ebb and flow. The trader that's doing good today could suck tomorrow. The trader that's doing great for 2 weeks can suck for 2 weeks after that. It just happens. Nobody in this career field is amazing every single day. It just doesn't happen. All right? You have to understand that losing is a part of trading. It comes with the territory. The biggest thing that you can adapt for yourself is that what you lose, you're willing to lose, and that you understand what you can lose before you take a trade. That's all I have for today. If you guys like this video, please give it a like. Please share it with your friends and family. And again, I really appreciate you and look forward to trading with you.